When it comes to building wealth in the stock market, timing matters. Not because you should try to day trade or guess every market swing, but because there are specific windows where the risk-reward balance becomes highly attractive. And right now, with the market entering Q4 of 2025, we're standing at one of those windows. Over the past few months, investors have faced a lot of noise: slowing growth in certain sectors, continued inflation concerns, interest rate uncertainty, and geopolitical shifts. But if you look past the headlines, you'll see something different: opportunity. And that's exactly what today's video is about. I want to share with you the 3 best stocks I'm buying right now before September 30th, 2025. These aren't random guesses, and they're not get-rich-quick gambles. They are carefully chosen based on 3 different strategies. 1. A safe growth stock that provides stability and steady upside. 2. A high-potential, undervalued stock that could deliver significant gains as the market reprices it. 3. A dividend-paying, long-term winner that builds wealth quietly while giving you cash flow. Together, these 3 picks balance safety, growth, and income, the 3 pillars of successful investing. And here's the thing: the timing matters. With Q3 earnings season wrapping up and Q4 starting, the market often shifts direction around late September. Historically, this is when institutions begin positioning for the year-end rally, and savvy investors can ride that wave. So, let's break it down, stock by stock. The first stock I'm buying now is a safe growth play. This is the type of company that has proven it can grow consistently, regardless of economic uncertainty. When I say safe growth, I mean a business with strong fundamentals, steady revenue growth, a wide moat protecting it from competition, and products or services that people will keep using no matter what happens in the economy. Think about industries like cloud computing, healthcare, or essential consumer technology. These sectors aren't fads, they're necessities. Why do I like this stock now? Because markets in 2025 have been volatile. We've seen certain speculative names soar and crash, but safe growth stocks are trading at reasonable valuations again. Many of them pulled back earlier this year due to interest rate worries, but their earnings have held steady. That disconnect between stock price and business performance creates an opportunity. Owning a safe growth stock isn't about doubling your money overnight. It's about sleeping well at night while still capturing upside. These companies often have pricing power, strong brand loyalty, and global reach. They adapt to new technologies and keep expanding, but they aren't overly dependent on hype cycles. Another reason I like this stock is the role it plays in a balanced portfolio. If you're only chasing high-risk plays, you'll eventually get burned. Having a solid foundation, companies that will likely be bigger 5 or 10 years from now, is critical. This stock represents exactly that kind of foundation. The bottom line: a safe growth stock may not be the flashiest investment, but it's often the smartest. And buying it now, before September ends, means you're entering at a favorable price before Q4 momentum potentially drives valuations higher again. The second stock I'm buying now is an undervalued opportunity, the kind of company that Wall Street has ignored or punished unfairly, creating a chance for long-term investors. Markets are emotional. Fear and greed drive short-term moves, and right now, there are companies trading below their intrinsic value simply because the narrative around them is negative. But as Warren Buffett said, be fearful when others are greedy, and greedy when others are fearful. This stock sits in a sector with huge future potential, whether it's renewable energy, artificial intelligence, advanced semiconductors, or biotechnology. These are industries shaping the future, and while not every company will succeed, the leaders will be massive winners. Why do I see this as undervalued? Because its earnings and revenue growth don't match its current stock price. Analysts may be overly pessimistic about near-term challenges, but the fundamentals suggest strong long-term prospects. Buying undervalued stocks takes patience. You're essentially betting that the market will eventually recognize the company's real worth. And history shows that markets almost always do. When sentiment shifts, even slightly, these types of stocks can re-rate quickly, delivering outsized gains compared to safer names. The key here is to identify businesses that have the resources and management strength to survive downturns and thrive in upturns. This stock fits that mold. So while others hesitate, I'm buying now, before September 30th. Because once Q4 earnings momentum kicks in, valuations could rebound fast. The third stock on my list is a dividend-paying, long-term wealth builder. This is the type of stock that rewards patience by paying you consistently while you hold. Dividend stocks may not get the same headlines as flashy tech names, but they are the backbone of many wealthy investors' portfolios. Why? Because they provide reliable cash flow. While prices fluctuate, dividends give you tangible returns regardless of market mood. This stock comes from a company with a track record of raising its dividend year after year, sometimes called a dividend aristocrat. That consistency matters. It means the business generates enough profit to reward shareholders while continuing to grow. What I love about dividend stocks is how they compound wealth over time. Reinvest those dividends, and your money starts working harder for you. Over a decade, the difference can be massive. In addition, dividend-paying companies often run more conservatively. They don't gamble with their balance sheets because they know shareholders expect steady payouts. That discipline makes them safer during downturns. Right now, with interest rates still in flux, dividend yields look especially attractive compared to other income options. And if the Fed eventually lowers rates again, these stocks could see even more demand from income-seeking investors. That's why I'm buying this one before September ends, locking in a strong yield today and positioning for both income and long-term appreciation. Now let's talk about timing. Why am I emphasizing September 30th? It's not about predicting the market. It's about recognizing seasonal patterns and institutional behavior. Historically, September is one of the weakest months for stocks. Many investors sell positions to harvest tax losses or rebalance portfolios. That often pushes prices lower than they should be. But once we enter October, something changes. Institutional investors, big hedge funds, mutual funds, and pension managers start preparing for the year-end rally. They buy into quality names to show strength on their year-end reports, and they position themselves for holiday spending data and Q4 earnings season. That shift often creates what's known as the Santa Claus rally, where markets finish strong. By getting in before September 30th, you're potentially buying stocks at seasonal lows, right before that momentum begins. It's not a guarantee, of course, nothing in the stock market is. But history shows that timing entries around these seasonal patterns can add meaningful returns over the long run. So while the exact day doesn't matter, the message is clear: acting before the end of September gives you a strategic edge. So, to recap: 1. A safe growth stock for steady compounding and portfolio stability. 2. An undervalued, high-potential stock that could see significant upside once sentiment shifts. 3. A dividend-paying, long-term winner that provides cash flow and compounds wealth. Together, these three stocks cover growth, value, and income, the three key ingredients of successful investing. And the reason I'm buying them now, before September 30th, is because the market is giving us a window of opportunity. Prices are reasonable, sentiment is cautious, and institutional positioning hasn't yet begun for Q4. This is the kind of setup long-term investors dream about. Remember, investing isn't about chasing hype or timing the exact top and bottom. It's about identifying quality companies, buying them at good prices, and holding for the long run. These three stocks fit that approach, and right now, the timing is favorable. So the question is, are you going to wait on the sidelines, or are you going to position yourself before September 30th? Light bulbs, stay smart, stay patient, and as always, stay dollar-wise.